Welcome back to our deep dive on small business loans. Ready for the next part of the journey?
I am. Last time we talked about so many loan types, and I was amazed by how many different lenders are actually out there.
It's a lot to take in,
It is.
but we've only scratched the surface.
Really?
Oh yeah, there are even more specialized loan options out there.
Yeah.
Ones that could be a really good fit depending on your situation.
Like what? Tell me more.
Okay, so let's say you need cash fast, and a traditional loan just isn't an option.
Okay.
Have you ever heard of merchant cash advances?
MCAs.
Yeah.
Vaguely. I think I skimmed over something about those in one of the articles, but I don't really remember.
Well, with MCAs, the lender gives you a lump sum of cash up front.
Okay.
And then they take a percentage of your future credit card sales. So it's faster than a traditional loan, but the fees can be a lot higher.
So it's like getting a cash advance on your future earnings, but it comes at a cost. I can see how that could be tempting for a business that's in a tough spot.
Yeah, for sure. They can be a lifesaver in an emergency, but they're not really a long-term solution because of those high costs.
Got it. Proceed with caution on the MCAs. Now, what about crowdfunding? I've heard a lot about it, but I honestly don't know much about it.
Oh, crowdfunding is huge now. And it's not just for gadgets anymore.
Yeah.
Small businesses use it all the time to launch new products, expand operations, or even just get working capital.
So it's like reaching out to a bunch of supporters who believe in your business and want to see you succeed.
Exactly. There are a few different types, though, like donation-based crowdfunding. That's where people just give because they support your mission, often without expecting anything in return.
I could see that being good for a business with a strong social impact, or one that's really focused on their community.
Right. Then there's rewards-based crowdfunding.
Rewards-based. Okay.
That's where you offer your backers something in return for their support, like early access to your product or exclusive merch, even experiences.
Oh, that's where all those limited edition t-shirts and pre-order bonuses come in. It's like a marketing campaign built right in.
Yeah, it is. And then there's equity crowdfunding, which is becoming more popular for small businesses looking to raise bigger amounts.
Equity crowdfunding, huh? What's different about that one?
Well, with equity crowdfunding, you're offering investors a piece of ownership in your company in exchange for their investment.
So it's kind of like a miniature version of going public. That's interesting.
Right. It's a way to get investment from a lot more people who might not have the money to invest in those big venture capital deals you hear about.
Okay, so donation-based for social good, rewards-based for perks and pre-sales, and equity crowdfunding for bigger investments and sharing ownership. I'm making a mental note of all this. What other alternative financing options should we know about?
Well, speaking of venture capital, that's another avenue, although it's not technically a loan.
Great.
Venture capitalists invest in businesses they think have really high growth potential.
Right. Those are the investors that swoop in and fuel those super fast-growing startups.
That's the one. They're taking a big risk, betting on your success.
Makes sense.
And they expect a big return on their investment if you succeed. It's definitely not for everyone.
I bet. Giving up equity in your business is a big decision.
Yes.
What kind of businesses are they usually looking for?
They tend to go for businesses that can grow really quickly and shake things up in their industry.
Like tech companies.
Yeah, like tech, innovative healthcare solutions, or groundbreaking products. They're looking for more than just a need for money.
Right.
They want a business model that can grow exponentially.
So it's about more than just needing money. It's about having a business that has the potential for huge growth.
Right, and they bring a lot to the table too, like valuable connections and industry experience, which can be a game changer for a new company.
Okay, so venture capital, high risk, high reward, and probably not for the faint of heart. So we've talked about a lot of loan types and alternative financing options. It's getting to be a bit overwhelming, to be honest.
I know, right?
How does a business owner even begin to choose the right path?
That is the million-dollar question. And the answer is, it depends.
On what?
On your business goals, your financial situation, how much risk you're willing to take, even your personality.
So there's no one-size-fits-all answer. It's about finding the right match for you and your business.
That's it. And that's where planning and research come in. You need to figure out exactly what your goals are.
Okay.
Are you trying to cover some short-term expenses?
Yeah.
Or are you looking to grow your business in a big way?
Right. Or maybe launch a new product.
Yeah.
Once you know what you're aiming for, then you can start narrowing down the options.
Right. And don't forget, choosing the right lender is just as important as choosing the right type of financing. Remember all those different lenders in the marketplace we talked about?
Yeah, traditional banks, credit unions, online lenders, all those options.
Each one has their pros and cons, and they're looking for different types of borrowers.
Okay, so how do you sort through all that? Do you just start making phone calls and filling out applications?
Whoa, hold on. Before you jump into applying, there are a few key things you need to do.
Okay, I'm ready. What should a business owner do to prepare?
First, get your financial house in order. Lenders are going to want to see how healthy your finances are.
That makes sense. What are they looking for?
Well, your credit score is a big one. Your personal score and your business score can both affect whether you'll qualify for a loan and what kind of terms you'll get.
Ah, yes. The dreaded credit score. It's
Yeah.
always so confusing to me.
Well, it's basically just a number that shows how likely you are to repay a loan based on your credit history. The higher the score, the better.
I know a good credit score is important, but what if it's not that great? Are they just out of luck?
Not at all. There are ways to improve your score over time, like paying your bills on time, keeping your credit card balances low, and making sure there are no mistakes on your credit report.
So there's hope, even if your credit isn't perfect.
Definitely. Lenders also look at how long you've been in business, how much money you make each year, and what your debt-to-income ratio is.
The time in business thing makes sense. Lenders probably feel better about lending to businesses that have been around for a while.
Exactly. And annual revenue shows that you're making money and should be able to repay the loan. The debt-to-income ratio shows how much of your income is already going towards debt.
Okay, so credit score, time in business, revenue, and debt-to-income ratio. It's like they're piecing together a puzzle to see how stable you are financially.
Yeah, that's a great way to put it. And once you've got a good grasp of your finances, the next step is to figure out exactly how much funding you need.
Okay.
That's going to help you pick the right loan and approach the right lenders.
So it's not just about how much money you need.
Right.
It's also about how you plan to use it
Exactly.
and what you're hoping to achieve with it.
Exactly.
Hmm.
So let's say you need to buy a new piece of equipment.
Okay.
Do you want to buy it outright? Or would leasing be a better option?
Right.
Are you trying to increase your inventory for a busy season?
Makes sense.
Or do you need working capital to manage your cash flow better?
I get it. Different situations need different financial tools. That's why understanding all those different loan types is so important.
You got it. It's all about matching the loan to your needs. And choosing the right lender is just as important.
Okay, so let's say you've defined your goals, you know your financial situation, and you've done some research on the different loan types. How do you actually find the right lender for you? Do you just Google small business loans?
Well, a quick Google search might give you a few ideas, but it's not the best way to go about it. Remember all those different types of lenders we talked about?
Oh, yeah. Traditional banks, credit unions, online lenders.
Right. Each one has their strengths and weaknesses, and they each have their own ideal borrower in mind.
Okay, so how do you narrow it down?
Think about your priorities. Do you want a lender who's local and you can build a relationship with? Or do you want the speed and convenience of an online lender? Are you looking for a lender who specializes in your industry or offers special programs for small businesses?
It's like trying to choose the right restaurant for dinner. So many things to think about.
It is. And just like you'd probably check reviews before you pick a restaurant, you need to do your homework on potential lenders.
Good point. What kind of things should you look for when you're researching lenders?
Well, you've got to look at interest rates and fees, of course.
Right.
But you also need to consider repayment terms, eligibility requirements, what their customer service is like, and their overall reputation.
So it's not just about getting the lowest interest rate. It's about finding a lender you trust and feel good about working with.
That's it. And don't be afraid to reach out to several different lenders and compare offers before you commit.
That makes a lot of sense. So now we've laid the groundwork, we've talked about different loan types, why it's important to understand your finances, and all those different lenders out there, so what happens next?
Well, next comes the application process.
Oh.
But we'll save that for part 3.
Sounds good. Let's give our listeners a chance to absorb all of this and come back ready to tackle that application beast.